On trading as a business, you're in the right spot. Let me know if you can hear me, if you can see my screen. Just put a little yes or something in the chat. Let me know that you can hear me so that I don't go on and on. Of course, now I'm asking people to tell me if they can hear me, and if they can't even tell me. So great, thank you. Hey, a few people I haven't met before. Hi, Dana, Timothy. Good to see you guys here. Trevor, nice to see you. You can hear me? Fantastic. So let me begin with our presentation today. Before I do, go ahead and type in the chat. Tell me how long you've been trading and maybe what it is that you trade that you like to work with. If it's a couple things, just type those in too. And let's see how much experience we have and what kind of markets we want to deal with. Is this better, Dana? I'm a little closer to the mic. Let me know if this is a little better. Good. So we've got Christopher here who's been trading for 3 months, Timothy a year, Trevor maybe 4 weeks. Got some crypto guys, some hopefully some stock people. That would be nice. Otherwise, I'll feel lonely. Yeah. So we spent a lot of time trying to even figure out what to call this course. It's trading as a business, how to capture and keep market-generated wealth. And I wanted to do something that would be specific or useful, rather, for each specific type of trading that you can do. Today, each of these, I'll say, symbols, each of these instruments can be traded on an exchange that looks and has the same feel as a US brokerage. But the fact is that just because the interface looks like it's the same thing as E-Trade doesn't mean that you have the same rules, the same protections, or even the same kinds of auctions. So the little things that you don't know about the difference between how cryptocurrencies get traded in a continuous double-sided market versus how Forex is traded in an over-the-counter market, these things can hurt you. If you don't know how much you're paying or what you're paying for in an option spread versus what you're paying for in a stock spread, these things can hurt you. So one of the things we want to do is make sure that you don't get hurt. And lots of people do. I could go through a lot of hype about this course, but I want you to know that 90% of the people who open futures accounts close them after 90 days and there's nothing left in them. And that's just the way it is. In fact, the average investor, according to Dalbar, which has been doing this survey for 20 or 30 years, makes about 4.3% per year on average. I know everybody here is above average, just like in Lake Wobegon, but that's a powerful drag. One of the reasons is that these markets are almost entirely composed of people with asymmetrical information. And that means that when you're trading with someone, you can't be sure whether he knows more than you do or you know more than he does. If you're buying, somebody is selling to you. And if they're selling to you, they expect the price to go down while you expect the price to go up. So someone's going to be right at some point. And we'd like to make sure it was you more than not. The other thing is these other people have arcane advantages. I wanted to call it secrets of the rich or something, but that sounded too salesy. The fact is that there are tools available to institutional traders that you probably don't have at this time. There are privileges available to larger traders that you may not have at this time, and it's our aim to get you there. And now for the bad news. Um, the guys who built this, the people who do this for a living, the scientists who know this stuff, all of these people, they know that there's trillions of dollars in the market too. And in each of those fields, they're also finding out that they can add another zero to their income. If instead of doing data science for an ag company, they do data science for a trading company. So there are a lot of people who realize how much is here, and they're very smart people. They probably have more capital than you do. They probably have access to more expensive information than you do. And it is very likely that they have more training in how to operate in the capital markets than you do. Furthermore, I think everybody here is looking at this not as initially their first job. Like, you probably won't be able to spend 40 hours on this. You've got other things to do. So you're working against people who have nothing else to do but operate in these markets. And, it's just hard. So I wanted to tell you that the value of what you learn in the course isn't going to show up in you becoming a millionaire quicker. It's going to show up in the losses that you would have had that you don't, because of the fact that you learned something here. So I hope that you're feeling a little trepidation about operating in the markets, maybe a little humility, because you should. It's hard to do. If it was easy, everybody would do it. So if you're finding it hard and difficult, don't feel alone. That's just how it is. I want to tell you, though, about a friend of mine named Caleb. He's a cattle rancher. He is not on Wall Street. He does not have an advanced degree. He doesn't have any degree. But what he does do is he spends about 2 or 3 hours in the mornings taking money out of the S&P pit. And then in the afternoon, he plays with his kid, hangs out with his wife, does some building. He likes to do remodeling and so forth. And he has done this without all of that background that these other people seem to have. On the other hand, Caleb has been through a physical and mental regimen that very few people in this room could even think of getting through, and that's his superpower. This is a friend of mine named Jamie. Jamie has a sense about the markets. We talk about knowing what a chart is going to do by just looking at it for 5 minutes. Jamie has that sense. That's his superpower. And I don't know, 3 or 4 times a month, he'll pop into the market with one of his trades. And within a couple of trading hours, 4 or 5 trading hours, he'll sometimes, pull $3,000-$5,000 out of the market. Jamie's job is attached to the markets during trading hours, so it's easier for him to see these opportunities. But he just loves the market. His edge is in seeing simply what's happening amidst a bunch of confusion, and just a great guy to work with. This is my partner, Mike Kickham. Mike's superpower is that if you do decide to retire and settle on an amount that you want from your savings, he can, using only stocks, make sure that you have enough money for the rest of your life and some to pass on to your kids without using an annuity contract, bonds, insurance. All this money will belong to you and you'll be able to pass it down. These are people who don't have data science degrees, don't work with algorithmic trading, and yet they've been successful. So what I'd like to hear now is, and think about this, just start typing, what is your background? How did you come to trading? How did you begin to think that it was even rational for you to take a course in trading and to do it? Yeah. Dana, we don't want people to quit. We want them to prosper. That was a funny comment. Yeah. So I'm going to let you think about it a little bit. I'd like to introduce myself, although I hate talking about myself. My name is Guy. I went to Washington University here in St. Louis, majored in philosophy with a minor in neurobiology. I got a degree in chiropractic and acupuncture, and I have since done a lot of work with clinical research, statistics, and so forth. I'm just drawn to numbers in that way. Starting, I'm going to say, in about 1998, 2000, I got myself professionally licensed, became a partner at Porter Kickham, where we do a lot of investing for families and retirement. I'm the portfolio manager at the Engineered Risk Advisory, where we use options and derivatives to get some structural safety for people. And I'm also a wealth navigator at LifeStream Family Advisory. And what we do there is we work with affluent families for their intergenerational wealth strategies. You don't really need to be very rich to be thinking about intergenerational wealth, and it's important to have an understanding of where that fits in your goals. So I've gotten a few answers here. Timothy started trading because he was doing sports betting. Very interested in that. So I'm guessing that you got a handle on what an edge would be, and you're applying that in some way to the instruments you choose. Now, Christopher got paid in crypto and had to figure out how to use it. That's something. There's a lot to be said there, especially in terms of hedging and so forth, because big companies get paid in crypto and they hardly know what their money will be worth, 2 hours after they get paid in it. Did the video feed just die? Is anybody else having a problem with my video feed? Okay. So Trevor, I'm sorry to say it's just you, my friend. Although there will be a replay on YouTube and the slide deck is available also. So I hope you can at least hear what I'm saying. Let's see. Yeah, just a little bit about my experience with trading. We are here. Actually, we're pretty far below there because this is an old slide. But I started trading back here in 1985. So I've seen the flash crash, the year 2000 debacle, on and on. I've just seen a bunch of shit. And as you can possibly tell, I'm a New Jersey Italian. I'm crude, even if I have some degrees. This is because all of my relatives look just like this. However, it's a long way from New Jersey to Lumi Wealth. And when I got to Lumi Wealth, I started to see that there were people trained in engineering, computer science, statistics, programming. There were people who understood programming so well that within days they were able to just start doing this stuff. But the thing was that not everyone had a really good grasp of what was happening in the markets, and their successes were, we'll say, abbreviated a bit just because of what they didn't know. So I talked to Robert about this. I'm sure you all know him. And we were asking ourselves for months, it took a long time, what would the ultimate trading course look like for Lumi Wealth students? We didn't want it to be something where people were looking for stock tips or what crypto coin should I buy or something. We wanted a class based on community. We wanted to focus it specifically on your interests, and we wanted to make sure that people could get clear results. So it was going to be something like a framework that was definite. And we came out with this. I'll give you a minute to really look this over. There are 3 phases to this course. The first is to survive. The second is to scale. And the third is to succeed. To survive, we're looking for a system, a tradable inefficiency that allows you to take money out of the markets because, according to academia, what we're trying to do should be impossible. So we're trying to do the impossible, and we want to do it pretty consistently. not a game for sissies. So once you have a minimum viable algorithm, you're making money. And this is where many classes just stop. Oh, look, you can pull $200 a day out of the market, which, it's better than not $200 a day, but it's not as helpful as if you figure out how you're going to scale your minimal viable algorithm, your system. How are you going to scale that? Can you get other people involved? Can you figure out a way to use more than just your own money? And once that happens, can anybody guess what the biggest risk is to wealth outside of the market? Can anybody come up with an idea of what your actual biggest risk is that you encounter every year? Biggest risk, not in the market. That's right. I'm not going to even go on until people say some stupid answers. So just kidding. Hey, listen, the biggest risk is taxes. If you start to make some money in this, you better make sure that all of your structures are in place, or the government will happily take half of your trading profits. Happily. That's part of what we do when we try to figure out how you're going to actually succeed with this for the long term. Yes, taxes. Exactly, the IRS. That's right. You guys have it. Good. So the course is not inexpensive. I think it's important to ask if this is a course for you. It is a course for you if you can collaborate with a team, if you can talk to people with respect and teach when it's appropriate and learn when it's appropriate. Have you ever done one of those group projects where like it took 2 or 3 weeks and then some kid who you almost never saw shows up to collect the A, with the rest of you guys? That's not what we're looking for. We are looking for people who are committed. So you have to know that it's going to take some time every week. It's going to take 5, 10, 12 hours a week. And really look and see if you can structure that time into your week. And lastly, you need to be coachable. Now, everybody says, oh, yes, I'm coachable. It's just untrue. You see, your coach asks you to make changes. Change is hard. There are tears. There's the gnashing of teeth. It's hard to be coachable. It's hard to change. But if you didn't change, nothing would happen. And lastly, the question is this the right time for you? So if you were about to have a baby, change jobs, and move, probably not the right time for you to do this course. On the other hand, if you're considering that we might be at the bottom of a big bear market, that the recovery from 30% bear markets is typically 200 or 300%, this might be exactly the right time for you. So if there are people for whom the course is right, there are people for whom the course is wrong, and those are people who are spectators. So unless you're going to participate, even with paper trading, the course won't do you much good if you're just watching it. You have to be doing it. Also, we're going to be sharing our victories, but we're also going to be sharing our losses. There's plenty of them, and really half of them are due to stupid mistakes. And we don't want anybody who's saying, well, I woulda, you coulda, you shoulda. In essence, there will be no jerks in this class. We're really going to be sharing some important, potentially embarrassing stuff. It's always embarrassing to be wrong. And what we're looking for is a way to move up from that garbage to a way to become consistent in taking money out of these markets and keeping it. So again, I'm going to ask your indulgence, but take a few minutes or take a minute and start typing. Tell me what frustrates you the most about your trading or about your finances or anything like that? Is it an emotional thing? Is it a circumstantial thing? Do you get too nervous? Just anything. If you can put your finger on what's frustrating you, that's really the first step in fixing it, is to get clarity, I guess, on this. So I want to tell you that people come to me for advice about this, and here are the things that I see. First, there's confusion. I say to someone, so what do you do when you decide to trade? And they really can't explain it to me, but they're very enthusiastic. I appreciate that part, but the method isn't well explained. Everyone also wants to remove the emotion from trading. And that takes a lot of work outside of trading, because it's going to be important for you to know exactly what you're trying to get, exactly where you are, where you're headed. And if you have a partner, your partner needs to be in on this too. Okay, you don't have to bore her or him with every detail of your market adventures, but it can't be that somewhere in the background you're thinking, oh my God, what if my wife finds out how much money I just lost? Okay. One of the other problems is that the wins are great, but they're not consistent. And also, people second guess themselves. They have a lot of wouldas and couldas about their trading. Yes, it would have worked if I had. Oh, I missed my stop because I didn't. Those sorts of things. Speaking of stops, bad entries and exits. People have a system, but they either don't know how to pull the trigger or when. Same thing with getting out of the trade. And this leads to aimless changes. And this is probably the biggest killer of traders. You do something that you consider a mistake, even though it wasn't. So you change your method around that. Something else happens, you change a stop. Something else happens, you change an entry. And before you know it, all that you're doing is just adapting to the market, second by second even, to make these changes. And it's exhausting, and it does not work out well. So each of these frustrations is probably, and I'm about to look at the chat, each of these frustrations is probably addressed somewhere in some section of this. So let me take a look here. One of the issues is the capital's too small. And then the next issue is getting the max value from my return on investment. So getting the maximum from your investment is something that we address in the first part of the course when we talk about making an algorithm that works. And right before we scale it, we start to get a measure of this ROI. And you're going to see this, Timothy, in the later part of the workshop today. And Chris, I appreciate the small part, but here's the thing. If you have something that works, we're going to figure out how you can leverage and scale it and get the attention of people who might want to join you if you would generously share with them what you're doing. It's not simple, but it is doable, and it's extremely lucrative. So in essence, you want to get the first algorithm that works. You want to monitor, manage, and leverage it. So speaking to your concern, Timothy, you want to make sure that you actually are getting the best out of your risk. And then it's a matter of scaling. So in order to survive, you develop your system, and each of these three phases have three parts. So in order to develop your system, you need to get clear on your risk, your situation, where you're at. You need to be clear on the fundamentals, the market tools that I talked about, the advantages that others have, and getting that playing field equaled. And then there's developing your strategy. And as I speak of this, generally, people start to get nervous, and they're nervous about, I don't know how to program, or I don't really have a strategy, or whatever. And this course is designed to take care of those issues. So if you're not mathematically inclined, we're going to do We're going to create a system for you, which is very visual. You'll be looking at charts. You'll be seeing colors. Really, it's very artistic, and it's a system that works pretty well. So it's okay if you don't know math. It's great if you do. It's okay if you don't know programming, because there are people in the class who do, and we're looking for some collaboration. But even if you don't know programming, we'll make things simple enough that you'll have a checklist. If you do know programming, we are going to supercharge your algorithms. So definitely bring those, because we will be working on them. Here are 6 ways to create a minimal algorithm or a minimal checklist for you to survive in the market. If you're visually based, you can do a trend-based system. Those are easy to see, and they're easy to program. You can do a mean reversion system. You can decide when a stock is selling too cheaply and buy it. You can decide when that stock is too expensive and sell it. And you can do this over and over again whenever stocks get out of line with their true value as you see it. There's information theory. There's actually a way, and this is interesting, because the math for information theory is very complex, and it's even more complex to try to explain it to a computer, to program it, but it's easy to see. And we'll show you how you can actually see new information coming into the market, and you'll be able to see when there's noise in the market. And understanding the difference between those two things will keep you very safe and enable you to make some gains. Some people rely on sentiment. I guess everybody's heard of what happened with GameStop, and getting a gang of people together to all move in one direction. Robert has been working on some bots that read sentiment about cryptocurrencies. So your big idea, your system may revolve around opinion. Your system may revolve around rebalancing with modern portfolio theory. That's a way to make things safe, get some diversification. And my partner Mike has made a fortune in using this to help other people with their money. The guy put 8 kids through college and private school. So it's a good system. Lastly, but not least, technical analysis and market timing. These are all of the ways that we can teach you in this course how to come up with an algorithm that works for you. There are others, of course, and if you have them, bring them. So once you've defined a system, the next thing to do is to see if it works and then scale it. One of the biggest mistakes traders make is not scaling a winning system. I know this sounds crazy, because we're all familiar with taking large losses and so on. But what happens is that people get conditioned through their own poor risk management. And when they come onto something that's really working, they're using their old risk management instead. So what we're going to do in phase 2 is, once we implement your system, we're going to improve it through looking at some statistics. And when we know it works, we're going to start to leverage it. So in essence, we're going to think big, start small, and then scale or fail. Once you have this working, and we are going to have it working at Interactive Brokers, please. That's the place to do this, because we can get your information directly and show you how you're doing. We're going to pick a benchmark, and we're going to get some very important pieces of data, which will let us know and let you know if you're making the right return on investment. And frankly, if you are adding any information at all to the system. So for instance, if you decided to buy energy stocks last December, you beat the S&P hands down, but was it because you knew anything, or was it not? If you start to do trading and you have a good record, sometimes what we find out is that your trading actually took away from the return that was possible. So these are all things that we spend a lot of time looking at when we go over the statistics. And Once we do, again, once you've passed this test, you're at a place where you can actually legally say to other people, hey, this works, and would you like to participate with me in it? And at that point, you're going to replace your inconsistency with permanence. And I'm trying to figure out how to say this. This is when you start talking about having a hedge fund or being an advisor or running an ETF or something like that. Once you have these things in place. Now, at my practice at LifeStream Family Advisors, I'm accustomed to having business owners who are going through the progression of their lives, you know, having kids, sending kids to college, having a practice or a business, and then selling it. And these people move up through various levels. And what happens with them is that they have different assets. That they have different assets, and the percentages of these assets change with their net worth. Now, can anybody tell me why these things might change in this way? Can you see that, of course, when someone isn't worth a lot of money and has a lot of student loans, that their primary residence would be a large part of their assets. As they get more money accumulated in other things, then the percentage of the primary residence becomes smaller, the business becomes larger, and each of these assets, this is what represents real diversification. Okay, you don't get diversification by buying Merck and Apple and Caterpillar. You don't get diversification through some series of stocks, because as we've all seen, when the stuff hits the fan, everything goes down. But what's happened here is that if you look at the asset allocations, this set of assets, especially at the $1 million to $10 million area, really resists this downturn. And the true value of diversification comes in this large asset allocation, not the micro allocation of the stock market. So Dana asked, highly recommended to go with a personal broker account at Interactive Brokers in order to proceed. I would say yes, it is recommended. If you don't do it, it's fine. You don't have to, but you're going to be filling in a lot of data in Excel spreadsheets if you really want to get to the bottom of what's going on with you. And Interactive Brokers does this automatically. So it's a matter of convenience. You definitely don't have to. If you are somebody who has a system that you think is going to take you places, then I definitely would recommend it. In phase 3, where we're talking about succeeding, I can speak very generally, but you'll have an option later to decide whether or not you want to really work on making a transformation of your wealth. And in that case, what we're going to do is use an app. It's called Elements. It looks very pretty on your phone. See, on your phone, it looks just like this. What it allows you to do is enter in some of your data, also to hook up some of your data, you know, through Plaid and so forth. And in real time, we can get an idea of how you're doing in terms of getting wealth that you not only make, but wealth that you keep. So again, most of the people I use this with own businesses, but you guys are traders, and trading is going to be its own business. So let me show you how this will work with you guys specifically. Your savings rate, which is going to include that brokerage account, is going to become income in some way. And we need to make sure that it is taxed in such a way that you aren't paying taxes that you shouldn't be paying. Also, we're going to make sure that you're holding your accounts in a correct legal manner to support the taxation break if you will. And the last thing that we're going to look at, and is the last thing everybody looks at, is something called total term. And essentially it's this: at your current lifestyle, if you sold everything you owned, how many years of your current lifestyle would you have? And not just retirement accounts. I mean, if you know your house, etc. We want to know how many years of living you have. So for people who are in their 40s, some of them have 5. For people who in their 50s, it might be 20. For people who retire in their 60s, it might be 30. And if a 60-year-old has 30 years of living, if he sells everything, he's totally financially secure. And I would say the largest number we ever came up with was somebody who had 350. So that guy had millions. He lived very frugally. Here's the point. We love trading. We're enthusiastic about it, but we also, everyone longs for the freedom of time, the free time, the ability to do what you want to do. And that's what makes somebody really wealthy. So what we're trying to do is give you one integrated framework. Can everybody see the LumiWealth trading as a business on their screen or not? Can you not see that? Okay, let me stop sharing. Okay, and now let me share. I am so sorry that this is not going right the way I want it to. Please give me a moment. All right. So here's the tab for trading as a business. You can see what the course is about. We've talked about it in detail. And here's the curriculum. You should take a look at this if you're interested, because if you sign up for the course, our curriculum is very plastic. If there are a lot of people who are into Forex or futures, we'll bend that way. We will figure out what it is you guys need that would make you successful the fastest. So take a look at this, and if something's missing, let us know. If something seems boring or unimportant, we can talk about that too. As usual with LumiWealth, there are 3 different kinds of plans. There is the self-directed course, which I guess will be available after we've done the first one. There's live classes, and then there's the individual tutoring and project help. So the difference is that I've actually made a slide about this so that we can see the difference between the 3 courses. If you want to do the self-directed course, if you don't want to miss out, you certainly can do that. There's no time constraints. You're on your own, and it is a good basis for improvement. If you want to do the live classes, you really need to want to succeed. This stuff is not easy, but we're certainly there for you to make it work. You'll need 5 to 10 hours a week. And the goal is to get you that minimally viable algo that's profitable, modular, and transparent. You can explain it to someone else. So if you're looking for project help or tutoring, then you're somebody who has the time to actually align all of your assets in this endeavor. you're ready to make sure that you're not paying too much in taxes as you do this, that your family's safe and secure. You are possibly a business owner or somebody in a private practice, an engineer or accountant or whatever. That's what will be available in the tutoring section. And also you'll have access immediately to the Elements app. No matter which you decide to sign up for, the class starts when you sign up. So I'm going to give you my contact information at the end of this. And when you sign up, make an appointment with me for an hour and let's sit down and talk about where you're at, where you want to go, and what you can do before the course starts. So just a last little quiz. I'm going to show you some things. I want you to guess what they all have in common. So there's two things they have in common. There's the Spanish flu, Wall Street in 1929, the Great Depression that followed, climate change, and the Dust Bowl at a time when 25% of Americans made their living from farming. We had to fight these guys. We had to fight those guys. We weren't done. We had to fight these guys, then these guys. And while we were doing that, there was a cultural revolution happening, as well as a gas shortage, trouble in the Middle East, inflation, and a stock crash. So what do they have in common? Timothy, yes, this is this is a correct class for that, as long as you know algorithmic trading. Timothy asked, I want to build an algo bot to trade in crypto forex. Is this the correct class? It would. Trevor said instability is the other thing. Yes, that is true. Not what I was thinking, but certainly good. Here it is. Each of these events happened in the last century, and each of these events happened in like the last 2 years. We're getting bombed with stress and instability and economic problems and cultural problems. This is a time of great change. And it's, as I said before, that if this is the bottom of the depression of 2022, then what more perfect time to start, with this. I'm here to take any questions you might have about the course or trading or anything. You guys were very generous with your time and attention today. That is the most precious commodity. In return, whether or not you decide to sign up for the course, if you have an issue that you feel is in your way as far as trading or just wealth accumulation goes, go ahead and use that Calendly link. Schedule yourself a complimentary hour because you let me have an hour to talk to you. So I'm happy to reciprocate. Let's try and get some clarity on anything standing in your way. And I will just hang on for a few more questions if there are any. I know there's like this 30-second lag. So haven't seen anything yet. Okay, well, again, I want to thank you all for your time. You have my link there at the end, and if there's anything that I can do for you, I'm happy to. So once again, take care, and we'll talk soon.